I hope you and the family have gotten situated in Oklahoma by now. And so I wanted to send over this quote for Jordan's life insurance. There's a lot of different ways that you can go when it comes to life insurance. Obviously, the two main routes are term insurance and permanent insurance. I don't really see much of a reason in any situation to do permanent insurance. So that would be whole life, universal life, indexed annuities, things like that. There's just not enough value there in order to even consider. And especially the younger you are, the way term premiums, as low as term premiums are, it does not seem like in any situation a permanent policy would be worth it, because he's probably going to pay 50, 60 bucks a month for $250,000 worth of coverage on a permanent policy. And if you'll look at what I'm about to show you, it's considerably less on the term side. So I'll get into a couple of reasons why I think term insurance is going to be better for him. So first off, it starts with the cost. So the premiums on a 10-year, $250,000 policy are going to be right here. So $1,240 a month for AIG, $1,247 for Mutual of Omaha, and then Banner is at $1,354. So we have access to about 20 different life insurance carriers. What I usually like to do is quote the least expensive ones. They're all A-rated companies, so there's no concern about solvency with any of these companies. But I also like to do the companies that I'm familiar with. And I'm personally insured through AIG. And most of the people that I insure are through these three companies. There's a couple of other companies we've written with for certain situations, but for the most part, these are going to be the best and the top companies that we can look at. So for $12.40 a month based on preferred rating. So I don't like to use the best rating system, and I don't like to use the worst. I usually like to do a standard average type rate. Hopefully he'll come in below these numbers, but for the sake of this comparison, let's just consider him to be preferred. So we have $250,000 of coverage here. We have $5,000 of coverage down here, and then we have $1 million of coverage all the way at the bottom. The difference in premium is not going to be very much between $250,000 of coverage versus $1 million of coverage. On 10-year term, and I'm not going to recommend 10-year term for him. I'm going to recommend 20 or 30 year. And I'll tell you why here in just a second. But if he did want to do the 10-year term, then it's only a $15 per month difference. This premium will not change. It's locked in for the entire term. So that $12.40 or $17.65, or if you went with $1 million, $27.35, that's going to stay there for 10 years. Now, when you're considering term insurance, a term policy is just what it says. It has a term, and once that term ends, you no longer have life insurance. So that does scare a lot of people. The philosophy behind term insurance is this. You're going to pay the least amount of premium. The only other option is permanent insurance policies. So you're going to pay a very low premium, and you're going to have a term of whatever you're comfortable with, 10, 20, or 30 years. And then at the end of that term, the idea is that you've had debt paid off, you're out of college, or your kids are out of college, so you no longer have college to pay for, your home is paid off. So you don't have a whole lot of debt, plus you have other investments that are accruing interest, accruing returns, and that will end up serving as your life insurance policy. And so that's the idea behind term, and that's why I certainly prefer term to everything. Whenever you consider all the expenses that goes into your life and all the risks and all the debts that you have, you typically come to a conclusion that the higher the death benefit than you were originally projecting. So for example, being 22 years old, if he gets married, he's going to have a wife. He may have kids down the road to support. They're going to want income. If she wants to be a stay-at-home mom, she's going to have a lot of income in order to make that happen. There's going to be college to pay for. There's houses that he's potentially going to own, that he's going to have debt on. He may have some investment debt at some point that he's going to want to have paid off. There's just a lot of different issues at hand when you're considering the death benefit. So if he got $250,000 and he bought a house worth $150,000, put the typical 5% down, that's already about $135,000 of debt right there. So if something were to happen to him, that $250,000 is not going to go a very long ways. Whereas if he had $1 million of coverage, that's going to pay off the house. That's going to get all the kids through college, hopefully. And then that's going to provide living expenses for a while. Then again, that $1 million is not going to go very far 10 years from now. So there's layering strategies, which I won't get into now, but that's kind of a very brief and basic overview of why I prefer to go at least 500 at the absolute minimum, and $1 million is what I would recommend. I enrolled in a $1 million policy, 30-year term, when I was 25, and it's going to cancel when I'm 55. But by that point, the idea is that we have enough other assets and we don't have any debt to where life insurance is rendered useless. So moving over here to 20-year term, the premiums are slightly higher, obviously, but it's not going to be that much higher than what we looked at on the 10-year. So again, if we start at $500,000, he's at $25 a month. That's very affordable. That's less than $1 million on the 10-year term. And I would actually prefer, or I would recommend doing a $500,000 policy for 20 years compared to $1 million for 10 years. Another issue with doing the 10-year, or one issue with doing the 10-year term, is that he's going to have to re-enroll when he turns 32 if he wants to. The premiums are going to be, he's 10 years older, the premiums are going to be 10 years higher. And with inflation and the way insurance companies handle their premiums, it may be higher than this. Well, let me just run it at a 32 real quick, just to show you that difference. So I'm not going to discuss these in full detail, but the premium would be $16.24 per month on a 250 for 20 years at age 32 compared to $10. So it's a very small difference right now, but 10 years from now, with inflation, with insurance companies and how they typically hike premiums, not nearly as much on life insurance plans as they do on health insurance plans. These may be a little bit higher, but still it's not going to be a huge amount. However, it would save him a little bit of money now just to go ahead and do the 20 or 30-year term if he wants to. So let me get back to his quotes, and then we'll dive into the 30-year. Okay. So let's take a look at the 20-year, finish this out, and then we'll move over to the 30. So this is the range that he's probably going to want to start at, the $500,000 or $1 million for 20 years, $25 a month or $42 a month for $1 million of coverage. This, again, the minimum that I would recommend is $500,000. This seems like a really good range right here. This $25 a month, $25 to $30 a month premium, it gives you $500,000 of coverage over a 20-year period. So once he turns 42, then he'll have to re-enroll in coverage, but he's going to be, he'll be into a job and well into his career or the ministry or whatever he's looking to do. And there may not be a need for life insurance at that point, or there may not be a need for $500,000. He may want to cancel that one and just go with $250 at the time. So there's a ton of strategies that you can utilize down the road. But for now, for this particular conversation, it's probably going to be a good idea to consider just the expenses over the next 10 to 20 years. And so again, that would be mortgage, investment debt, rental houses if he wants to do something like that, any loans through the bank, any credit card debt, student loan payment, any and all debt needs to be wiped out. There needs to be living expenses. I recommend 3 to 5 years, whatever that looks like for most people. It's usually different person to person. And then I would actually prefer that college be paid for out of this as well, so that the spouse does not have to worry about funding college for kids. It's all taken care of. And really the only way to do that is to go $500,000 or higher. So that's why I recommend at least $500,000. On 30-year term, we're looking at $22 a month for the 250 death benefit, 37 for 500, and then also once we get up to $1 million, we're looking at about 68. So it starts to get a little bit more expensive once you hit the $1 million mark, and then once you hit 20 years and past it. But if you really consider the future, the $37 a month premium for 30 years, that's going to be pennies 30 years from now. 20, 25 years, whenever we're getting close to the end of this term, $37 a month is going to feel like buying a loaf of bread. And so if the what I would probably say is more important is probably the death benefit amount. Again, the likelihood of anything ever happening to him to where he would need to utilize this is extremely low, but it's possible. And I recommend life insurance for 100% of young families. There's not a whole lot more to this discussion at this particular time than what I've put here. And so if you have any questions, feel free to give me a call. But this is going to be what we're looking at as far as premium. So again, I'll bring these up one more time just so that you can see them. So we're going to be anywhere from $12 up to $27 to $30 on the 10-year term. On the 20, it's going to be anywhere from $15 a month up to $42, $43. And then on 30 years, we're looking at 22 up to about $70 per month. So you have to consider budget, you have to consider future expenses, and you have to consider the fact that the premiums are going to stay the same for the entire length of the term. And so, more complicated strategies can be talked about if you want to, about layering, doing, $400,000 or $500,000 policies, and then terminating them as debts paid off, as life changes occur. That's a great strategy, and that's one that I personally do myself. So if you do have questions, just give me a call. There's no enrollment period for life insurance. We can do it anytime. The application's about 30 pages long. We'll fill out a lot of that for him. But if he does want to move forward with anything, then we can send over the application electronically. He can fill that out, and then we'll just take it from there. But just give me a call with any questions. And again, I hope you guys have settled into Oklahoma, and it'd be great to talk to you. So I hope y'all have a good one.